Welcome back friends, for one more update from the world of high-growth EV stocks. In case you are new to this channel, please do consider subscribing. And in case you live in the United States, we would like to take this opportunity to mention that we have now partnered with Webull, and they are giving away 2 free stocks worth up to $1,850 in total when you make an initial deposit over $100. That's just a lot of free money, and we think you should definitely consider signing up for them. All you have to do to claim this free money is use the sign up link from the description of this video. Now let us get right into it. After a stock goes through a massive rise, and then starts correcting, it is usually super important for us as traders and investors to know where to enter the stock again. In other words, to track the bottoms of the stock. Finding guidelines for this is usually very easy, if one uses the technical chart analysis. We'll be obviously using the technical chart of NIO to illustrate this example, and show how truly magical some of the tools on these technical charts can indeed be. To get started, we open up TradingView, and open the chart for NIO. Now, after opening up, our first task is to find an area in the chart from the last 12 months where the stock had a low, and was trading fairly stable at that low for some time. For that, we choose the $16 mark where NIO was trading stable for some period last year. Now, we take the Fibonacci retracement tool, and start selecting an area starting from this $16 low to the absolute peak NIO has made in its bull run. So, we go from $16 to $66. This now gives us the various support levels of the NIO stock in case of a pullback from the peak of $66. Now, the part that is most important here is the fourth area from top, which is in deep green. Many traders consider this the golden zone for buying opportunity. Usually if a stock pulls back that far down, around this deep green is usually the best possible support found, before the stock goes back up again. As we see with NIO 2, around the $36 level, we already had this solid support and buying opportunity. Now, the pullback doesn't always drag a stock all the way down to the golden zone, and in such cases, all the support levels above it become the next best possibilities for buying or averaging down your cost of investment. So, as per this area, we see such next support lines for NIO are at $42 and $48 and then also at $55. Now, if you want to test out the authenticity of this technique, you can choose a different low, and simply draw a different area with the Fibonacci retracement tool as well. As you will now see, we will also draw 2 different retracement areas, one starting at the low of $20, and one starting at the low of $10. As you can see, the golden zone and other support levels are more or less around the same price points. These support levels are a great guidance, and usually experienced investors love buying at these support lines to average down their cost of investment. As always, thanks for tuning into this quick update. And if you're looking to learn about what Kathy Wood thinks of the recent corrections in growth stocks, and the prospects of Chinese electric vehicle market, please check out the video you now see on your screen.